All right, this is Bruce for FXCOINZ taking a look at spot silver. So starting with the long-term weekly chart, you could see the long-term breakout above this high from 2011 back here in October of last year. There was a sharp advance from that breakout from roughly around about 140% advance from that breakout, amazingly, and reaching a 121.67 high before last week's sharp sell-off to a 3-week low and the red 10-period moving average. Now, it looked like that level may hold at first because it was confirmed by the top channel line here on this parallel trend channel. Lower line here, top line here. But obviously it did fail this week with a breakdown below last week's low and a break below the top channel line, reaching support on Friday at the 20-week moving average with a low of 64.06. So didn't quite hit the average, but close enough given the reaction. And that average is joined by a couple other levels, or at least one other level that we want to pay attention to, which is the 61.8% of the shorter upswing here and this daily high right here. So the combination of the 20-week moving average and the 61.8% Fibonacci retracement followed by the bullish reaction suggests that a bottom may be in for this correction, at least for now. And you can also see that we're pretty close to this internal short-term uptrend line as well. And we'll keep an eye on that as price moves forward in time. You can also see that, at least at the time of this video, that price has gotten back above this prior support, becomes resistance, and now it's support again. Moving over to the daily chart to look at the detail a little closer, we can see this initial drop found support at the 50-day moving average on the daily chart, had a counter trend rally up into resistance near the purple 20 moving average, was support, now resistance, along with the red 10-period moving average, 10-day moving average. And the 50% Fibonacci retracement. So the 38.2% retracement is right here, the first upside target at 86.07. That will trigger on a breakout of this hammer pattern if Friday completes with a hammer pattern on a rally above Friday's high. So it's still too early to say what that high might be, but at this time it's 74.72. 38.2% retracement, the minimum, 86.07. And then we have this lower swing high here at 92.20, joined by the 50% retracement at 92.87 and the purple 20 moving average. Now, we already had one swing back at this scale that's checked the 20 as resistance, and it confirmed as resistance. So it's certainly possible that a lower swing high will be established on the next rally. Which looks like the next rally looks like it's coming pretty soon. So whether we get a rally above this high or a lower swing high will make a big difference as to what might happen next. But for now, it's looking more and more like this bearish correction may be done for now, and that leaves this whole range open for a trading to occur within over some period of time, possibly some consolidation pattern forming and some larger basing pattern forming maybe in silver. All right, that is it for silver traders. Have a great month.